Hi there, Aundrea Beach-Greco here, your local mortgage expert. I am super excited to share this information with you. Don't forget to like, subscribe, and click the little bell. I post new content all the time and I'd hate for you to miss it. Come on in and let's get started.
And today we're going to talk about some myths and misconceptions.
Hi there, Aundrea Beach-Greco here, your local mortgage expert. Today we're going to be talking about the myths and misconceptions of a reverse mortgage. There are so many things flying around out there that I've heard that are so untrue. This truly is a great product for those who are 62 and older, assuming it's applied correctly. And that you have a knowledgeable person helping you structure it. But here's some of the misconceptions. Are you ready? A reverse mortgage, your home gets sold to the lender. The heirs don't inherit the property. The homeowner gets forced out of the home. Your Social Security and Medicare benefits are affected, and they're huge out-of-pocket expenses. Now, those are all false statements. And today, we're going to talk about some myths and misconceptions. So today, let's talk about some pros. Let's talk about some awesome things about a reverse mortgage. First off, there is no mortgage payment. Yes, you still have to have taxes and insurance paid, but there's no mortgage. Think about how much money that puts back in your pocket on a monthly basis to help with living expenses. You get to stay in the home. You get to keep title to the home. You don't have to move if you don't want to. The funds for the reverse mortgage you're getting pays off any existing mortgage or any debt that you want, and the remainder can come back to you in either a lump sum or monthly payment. You get to choose. A reverse mortgage doesn't affect your Social Security or Medicare benefits. Now, you may have a unique, complicated situation, so if that's the case, you might want to check with your financial advisor for further details. Did you know a reverse mortgage is a non-recourse loan? What that means is that you or your heirs will never owe more than the property is worth. I know that's a big fear with a reverse mortgage, is increasing the balance higher than the property is worth and then having to transfer that to your heirs, but that's just not the case. And guess what? As your home appreciates and gains more value, you can always refinance and do another reverse mortgage and tap into more equity and get more funds into your pocket. You know, I understand living on a fixed income in this society is very, very difficult. And with the cost of living increasing, having extra money for your medical expenses, your bills, for vacations, seeing your kids, your grandkids, or whatever that looks like for you, I can see that as such a sigh of relief, just knowing that you don't have a mortgage payment. And then guess what? When you do pass away, whatever equity is remaining after the loan is paid off will go to your heirs. The bank's not going to take your property or keep your equity. So let's talk about some cons, because of course, like any situation, there are pros and cons. And we don't want to sugarcoat the situation and make it look like this is the best loan ever. And we don't want to make sure we're being unrealistic. You do have to evaluate all of the options when making this kind of a decision. So of course, the first con would be is that the balance will keep increasing. It's not like a forward mortgage where every month you pay the bill and your balance diminishes month by month, year over year. In this situation, your balance increases month over month, year over year. So with this reverse mortgage, you know, as this balance is increasing, it may take assets away from your heirs. That's something to think about before you go into this situation, because you want to make sure, if you're planning on leaving your estate to your heirs and the home is part of that, you want to make sure how this mortgage will affect that and how it will affect them once you're no longer here. The fees on a reverse mortgage are slightly higher than a traditional forward mortgage. So that's something to keep in mind. However, we don't expect you to be refinancing every couple of years like you might have with a traditional forward mortgage. A reverse mortgage will be due and payable at a maturity event. There's a couple of events and things that will trigger this maturity event. One is when the last surviving spouse passes away. 2, if someone is ill and outside the home for over 6 months up to 12 months, that could trigger the maturity event. If someone leaves the home for over 12 months because of a medical reason, that will trigger a maturity event. If they leave the home for over 6 months for a non-medical reason, that is another instance where the maturity event will be triggered. A maturity event is when the loan becomes due and payable. The lender wants to be repaid for the debt that's owed. If the homeowner fails to keep the taxes and the insurance current, the lender could call a maturity date and the loan will be due and payable. A reverse mortgage is an amazing tool that can be structured for those people in retirement years who have substantial equity that you can tap into that, use it for your living expenses, medical bills, and just to help daily expenses, just help with daily life. Once you're on a fixed income and you're not able to work, this will give you an additional source for you to utilize to help benefit your lifestyle. If you want to explore what a reverse mortgage would look for you, whether you want to buy a home doing a reverse mortgage or refinance your current property using a reverse mortgage, why don't we sit down, look at the numbers, and see if it's a fit for you. Then we can include the family and make sure that those are right decisions for long-term strategies, because it is important you keep everybody in the loop. You may want to include your financial team, such as your estate attorney and financial planner, and see what they think. Everyone's going to have their own opinion. The bottom line is this: if you're able to tap into that equity without changing what you wish for your heirs upon your demise, wouldn't that help everybody? If I can help in any way, please reach out. I'd love to hear from you. We'll talk to you soon.